Hello guys, welcome back to my channel. In this new video, we're going to do some trade breakdowns where I'm gonna share the thought process and the logic behind some of the trades that I took this past week. I'm gonna share some winners and losers, right? The thought process, the logic, and the lessons learned. So all the trades are based on the 1 minute 5 second scalping model, which I have shared on this video right here. And this is explanation of the model, right? And this is a backtesting video. Reminder that these are all DTFX concepts. So if you relate to this style of trading, make sure to check his channel, study the masterclass, and do the proper backtesting. And now let's just get started. All right, so let's start with the first trade. I'm not gonna go through the whole model again. If you want to check the model, you can go and watch the previous videos, right? Or you can just follow along with me. It's not that hard. I mean, it's just a 1 minute higher time frame zone, right? And then a 5 second flip confirmation. It sounds easy. It is easy actually, but that doesn't mean that you can trade it effectively just because you understand it, right? You need the proper backtesting. You need to put in the repetitions, demo trade it. So basically you need the confidence in order for you to execute it properly. All right, so let's start with the first example, and this is a winner. It's actually 3 winners, but as you can see, they are based on the same idea, right? On the same trade idea. So let's start. First of all, we're going to start with the 1 minute time frame. So this is my higher time frame, right? So as you can see, all I need is a swing point, right? And then I'm gonna go from there. So basically we have this high, put in this high, and then we put in this low right here. We have a break of structure here, and then we traded here, right? So we came back to the zone, to the previous zone, which is this one, right? And then we put in a new low, right? And now we're expecting price to came back to the zone, which is this swing point. This is the new swing point. And we have that here. So price returned back to the previous swing point. So we are expecting price to reject from here since we are bearish, right? And we have that rejection, although price traded above this high, but we don't have a closure. Since we don't have a closure and we don't have a closure above this protected high, we are still bearish. So after we traded back into this swing point, we created a new low to here. Now, where is the previous or the last swing point, which is this one, from this high or this low to this high, right? So basically, this is the structure that we have. And we are looking for shorts opportunities once price return to this area, and this area. So once price retrace back to this zone, I'm going to look for a lower time frame confirmation. That's it. Now, if the zone is too wide, right, I'm going to look for areas inside that zone that price might potentially reject from, right? So that's for refinement purposes. On this time frame, on the 1 minute time frame, we have this zone right here, this unmitigated zone. It doesn't look like a zone, so I had to go to the 15-second time frame to draw it. So as you can see, we have this low to this high. We traded below it. This is the SNDR actually responsible for breaking this low, right? And this is unmitigated. We have a top here, and we are looking for a deeper top into here. So this is how you can find areas inside the higher time frame zones, inside the higher time frame swing points that price might potentially reject from. This is not the simplest or the cleanest example, but if you go through your charts, you can understand what I mean. Sometimes you will find those areas clean on the 1 minute time frame. You don't have to look for intermediary time frames, right? So as you can see, we have put in this high and then this low and then this high, right? We actually didn't close above this high. So basically, this is one single zone from here to here. We traded below it. We returned back to it. So this zone right here is mitigated, right? And then we put in a new low. So the new zone is this one. from here to here. And this is unmitigated zone, so you can now predict that the price won't go above this high and it will just reject from here, and you're going to look for your confirmation inside this zone, right? So once price retraces to here, now we're going to look for entries on the 5-second time frame. So let's do that together, and this is the 5-second. Now let's follow structure. Basically, all we're going to look for is this simple pattern, which is the flip pattern. So we have a break here. We're going to look for retracement, or you can just enter from here and look for shorting opportunities, and that's it. That's the entry pattern that we're going to use. Some of you will see this as a breaker, right? And it is actually. But all we need is that the break of that protected low or protected high if we are bullish. So let's follow structure from here. We are trading higher now, right? We put in this high, and then we retrace them back, and then we put in a new high. We closed above the previous high, so that makes this low a protected low, and if we close below it, we're gonna head lower, right? We put in this low retracement, and then we put in a new high above this high. So now this one right here is the protected low. So if price close below it with a body closure, we're going to look for shorts, and that is exactly what happened. So we closed below it here, and I immediately took my entry from here. I didn't wait for that retracement, right? I took my entry immediately from here. So what happens is that price hits my TP in like 5 seconds, right? This is a candle, 2 candles, actually 10 seconds, right? So as you can see, price didn't retrace back into the previous zone, which is this one, right? Now this is the previous zone, and we don't have a retracement back to it. We have this wick right here, but we are expecting a deeper retracement, especially that we have a fair value gap inside, right? So zones with fair value gap inside are high probability zones. It will offer rejection, right? So if we extend this in time, so remember that this is the zone. So after I took my entry from here, exiting from here, price started retracing it back into this zone. So you are still good to go. You are still good to look for entries, for shorting opportunities. Since we are still bearish, we are on the same context. So if, for example, this price kept going down and down and down and hit a higher time frame point of interest, higher time frame zone, and that zone shifted the whole structure from bearish to bullish, then I'm not going to look for shorting opportunities from here, right? Because we were likely to liquidate this zone, right? Since the narrative now is changed, but we are still bearish. We are retracing back. We're creating this high, and this high is a weak high because it couldn't create a new low. So we're expecting price to liquidate this high, and we do have that here. So once price retraced back into the zone, I took another entry. My stop loss here, just like the first entry, stop loss was here, right? And price traded back all the way to the SNDR. So this wick is a hidden SNDR, right? And then it continued lower. So this is the second trade. It was also a winner, right? Price broke this low right here, as you can see, and then it retraced back into the area. So we have another zone right here. So price is giving us a lot of opportunities to get in, as you can see. Once price came back to here, we have a break of structure here, right? So we have another break of structure, and once price retraced back to the zone, I took another entry and exited from here. So as you can see, all trades are based on the same concept, which is breaking a low, returning back into the zone, looking for a confirmation, right? But don't expect for price to give you all these entries, possible entries every single time. A lot of times it will give you this break of structure, return it back into the zone, and then it will continue lower and lower and lower, and you only have one entry from here. But that doesn't mean that you shouldn't look for other entries. So for example, price is moving like this, so maybe this is the break of structure that happened here. So as you can see, here's the break of structure, price continue lower, it gives you a retracement, right? And now it's creating lower lows and lower highs. So since this area is mitigated, right, you can look for entries from here, right? Once price return back to this zone, and maybe you can look for another entry from here. But keep in mind that the probability will decrease with every single new swing point, because eventually price will flip to mitigate a higher time frame zone. So basically all these swings would become a higher time frame zone on, so this is the 5 second. If we go to the 1 minute, this will become one zone, one unmitigated zone. So price needs to flip in order for it to mitigate the zone, right? So this is the first trade, or the first pack of trade. I grouped them together because they are based on the same trade idea, right? They share the same context. So let's move on to another example. The second example that I have, it's also a winner, right? So this is the last example before I move on to some losers, right? So this one is interesting. I try to pick only the interesting trades that I took. Why this is interesting? Because I had to move on to the 15 second as my higher time frame instead of the 16 or the 60 second or the 1 minute. And I will explain to you why. So basically, as you can see from this picture, we can clearly see that the market is not giving us any retracement back into the previous zone. So we have this zone right here, and we continue lower. Now we have this zone right here, and we didn't have that deep retracement that we want. For example, from here to look for that entry, we have a new zone right here, or we have a new leg, and we didn't have that retracement again to the previous zone, which is this one. Now we have a new low, we have a new leg, and as you can see, price is basically moving like this. So I get a lot of questions about this, on how to deal with this. So when price doesn't give you those retracements, it leaves without you, how do you deal with this? And I'm going to answer your question on this trade example. So basically, when you see price action is moving like this on a certain time frame, right? For example, here on the 1 minute, you need to know that on lower time frames, you will see those retracements. So if this is 60 second, so again, if this is the 1 minute time frame, in the 15 second or the 5 second, you will have those zones, right? You will have those retracements like this. So all you have to do is to go lower, right? You need to drop lower. You have two choices here. You can either let this pass and you won't participate in this, or you can drop lower into the time frames and you can look for your entries, right? So let me show you how the 15 second looks like. So as you can see, we don't have any deep retracements on the 1 minute. But if you go to the 15 seconds, as you can see, price is moving normally, right? It's not moving that fast. And as you can see, here's my trade from here to here. And let me explain to you the narrative or the thought process of this trade. So after putting this high, this is a pullback, we're creating a new low here. We retraced back into the zone, and then we're creating a new low, right? Follow with me. Price from here retraced back into the previous zone, which is this one right here, right? So these are 15 second zones, right? Remember this. I think this is quite easy to follow, right? So once price taps into this previous zone, now we're gonna drop lower into the 1 second time frame. I know this is intimidating, but it's not. It's just market structure. It's faster, but the market structure is the same. It is clean. All right. So this is the 15-second zone that we talked about, and once price traded back into it, we're creating a new low. All right. And now this is a new zone, right, from here to here. Inside that 15-second zone, we have unmitigated 1 minute zone here. So this is what I have been telling you earlier. Unmitigated zones inside higher time frame zones. So inside swing points, and inside this unmitigated zone, we have another zone. We have another unmitigated zone right here, as you can see. Price broke below this low and it didn't return back to it. So this is likely the area that's going to push price to the upside, and that lower time frame confirmation, that flip, so that flip is likely that going to form here. Now, since we are moving or trading or rejecting from this 15-second zone, and we confirm that we are bearish and we lift this unmitigated zone, I didn't have to look for a 1 second confirmation, right? Once price returned back to this zone, to this unmitigated zone, I took my entry here inside this zone. So I'm constantly refining. And inside this zone, we have also this zone right here, which is the SNDR, responsible for breaking structure. So this is the 1 second time frame, guys. And as you can see, it is textbook. All the rules are applied to any time frame. Took my entry from here. The stop loss, it was here, a conservative stop loss. And I took my entry from here. I'm sorry, my exit was here, right? So this was also an interesting trade. And now let's move on to losers. All right, now moving on to some losers, right? And let's take a look at this picture right here. So I don't have the 1 minute time frame for this, but basically we have a 5 second. So we have, let me just put, so we have a 1 second or a 5 second unmitigated zone right here, and this unmitigated zone on the 5 second time frame is located right inside a higher time frame zone, which is the 1 minute. So here you can see on this picture, you can see that this is the zone, and we were on the 50% of the 1 minute zone, right? So basically we have a 1 minute zone, we were on the 50% of that zone right here, and also we were on a 5 second unmitigated zone inside that 1 minute zone. So here I looked for a flip, right, on a market structure shift, but as you can see, it was a loser. So there are two main reasons why this one turned into a loser. The first one is that I didn't pay attention that we were on a major reversal area, which is, we have this 1 hour swing point, bearish swing point, and we were at the 50% of that swing point right here. So as you can see, this is the 50% of that 1 hour swing point. I didn't pay attention to that, although I don't look at the 1 hour most of the time, but we were on a major reversal area, right? So I didn't pay attention to this, and we were already flipping, right? So the market structure was turning from bullish to bearish. That's the first thing. I didn't pay attention to the higher time frame, and although we were on a 1 minute zone, the higher time frame will always have a priority over the lower time frame. So that 1 hour reversal is stronger than a bullish, basically 1 hour bearish swing point is stronger than a 1 minute bullish swing point, right? So that's kind of obvious. So that's the first reason. I was trying to buy while we were on an area of reversal, higher time frame area. The second thing is that this flip right here, or this market structure shift, was not a valid market structure shift. So as you can see here. And why is that? Because this high, this is not a valid pullback. We didn't close above the candle that put in the low, the last low. So here we don't have a closure. Thus, this is not a valid high. I don't know why I took this trade. Maybe I wasn't focused. Anyways, I took the buy from here. And also the buy, as you can see from here, it was an early buy, right? So if I entered from here, from this zone, which is the SNDR, although this is not the SNDR because this is not a valid break of structure. But if I entered from here and my stop loss here, I would have exited here with a 1-to-1 trade. But anyways, the whole context was wrong right here. So I took a loss. And after this, I took another buy from here. And this trade was not impulsive or something. This is kind of this was part of the plan. So basically, we have this unmitigated zone here, right? So as you can see, this zone, although it failed, but it gave that rejection, right? It gave us a rejection. From the 50%, it went all the way to like the 80%, and price traded back into here. So this was a 1-to-1 trade. But of course, I needed a confirmation. But here we have an unmitigated zone inside us, right? Price never tapped into this zone after leaving it, right? This is the origin of the move, right? And I took an entry from here, exiting from here. And the reason that I was confident with this trade is that we also had the unmitigated zone above us, right here. So I was buying from an unmitigated zone here, and I was targeting an unmitigated zone above us right here. So this trade was textbook, right? And it was part of my plan. So I believe I ran out of examples, right? If you have any questions, please leave a comment down below or DM me on my Twitter account, and I will answer you as soon as I can. Now, happy trading and good luck.